Hi everyone and welcome to In the News Today.
Today, we're gonna print more money.
And if you don't know what we're referring to, stick with us for just 4 minutes to find out because it's really important.
Have you ever wondered why the S&P 500 or the stock market in general has been pumping since March 2020?
Is the economy in such a good shape that we've been seeing record gains and new all-time highs on a daily basis now?
Or is it maybe something else pumping up the economy artificially? Could it be the Fed that's printing money like crazy and buying up assets that's pushing stock prices higher and higher?
Where to start with this one? Let's look at the M2 indicator first. The M2 is a broader measure of the money supply that includes cash, check deposits, and easily convertible near money.
In easier terms, it's basically a sum of all the money that's out there. And if you look at the graph, it's not hard to tell why they switch reporting this indicator from a weekly to a monthly basis.
The overall money supply is just going up, especially since March 2020, following the pandemic stock market crash.
Wonder how this graph translates into numbers? It means that more than 40% of US dollars in existence were printed in the last year, a measure nicely called quantitative easing.
Money printed out of thin air with absolutely nothing to back it up. Money that is used by the Fed to buy junk bonds, stocks, and other trash in order to keep the stock market up.
And that is why the stock market is completely irrational right now. While the economy is in the worst shape since the Great Depression, the stock market is soaring to new all-time highs almost on a daily basis.
We are living in a world where the stock market is not free anymore, but is being manipulated and controlled by the Fed and central banks.
You may say, well, this QE stuff has stopped, or will need to stop soon, right? Otherwise, we risk going into hyperinflation, right?
Well, Jerome Powell, the chairman of the Federal Reserve, just announced that its tapering measures are going to be done in a gradual manner that concludes around the middle of next year.
Which basically means that the money printing press will not stop until then.
To add on top of this, Janet Yellen, the Secretary of Treasury, has renewed her call for Congress to raise or suspend the US debt before October, warning that a failure to do so could trigger an unprecedented financial crisis in the US.
Her exact words were,
The U.S. government's always paid its bills, but now the consensus on both sides of the aisles is that failing to raise the debt limit would produce widespread economic catastrophe.
So, the current $28.5 trillion debt is just not enough to sustain the American economy anymore. There needs to be more and more debt for things to stay afloat.
We're sorry to say this, but this type of non-sustainable economy based on debt, QE, or printing infinite money, will likely collapse one day, and this will cause a severe global financial crisis much worse than back in '08.
And you could argue that this money is being used wisely. But the truth is that it's not. The latest $1 trillion, 2,700-page infrastructure bill contains quite some interesting things.
Like $250 million on fighting invasive species of plants, $50 million on studies to figure out how to get more tax money from citizens,
Further studies on cars and wildlife collisions, and even studies on driving impairment while under the influence of weed.
This is as far from infrastructure as things can be. And it's not what the US economy needs to spend money on. But who are we to decide that?
It's hard to see an optimistic outcome or a positive end to all of this.
That is only accumulating. Inflation is on the rise. Employment numbers are not promising and the worldwide economy is not moving in the right direction.
So we'll leave you with this question. What do you think is the answer to getting things back on track? Let us know in the comment section down below.
That's it for today. If you like our content, please consider subscribing to our channel for more updates.